Now, with the rising cost of living, South Africans are borrowing from Peter to pay Paul, and that has become dangerous because interest rates, as you heard there, have risen sharply and are set to rise further. That makes debt repayments much more expensive. Let's look at this graph that shows just a year and a half ago, the prime lending rate was 7%. Now, look where it is now, 10.75%. It's soared, and predictions are it'll climb to around 11% when the Reserve Bank does change interest rates this week. That means in just 1.5 years, your bond repayments on a 1 million rand house. This is just an example, and this is a payment over 20 years, no deposit. You can see that those bond payments have gone from 7,700 or so to above 10,000 rand. That's more than 30%, and they're set to rise further. Now, to discuss, we're joined by the COO of Debt Rescue, Annaline van der Poel. Ms. van der Poel, thank you for being with us. Tell us more about your findings that borrowing has become a lifeline for millions of South Africans.
Good evening, and thank you so much for having me. Indeed, obviously we've seen since the COVID pandemic has started, we saw at least that the interest rates had reduced, which helped consumers obviously quite a bit. And we'd hoped that when the pandemic left our shores that things would stabilize. But unfortunately, we know globally there's a massive problem with inflation in most countries. We've not been spared that. We've had the additional factors such as load shedding, which has made it very, very difficult. So inflation is very high. It went up again, in spite of showing a downward trend. It's placed pressure on your living expense element. And because of inflation, they've had to hike interest rates. So the reality is, as you've just shown on your graph there, that the average consumer who has debt has really been hit double in terms of living costs have gone up and debt repayments have gone up. And consumers, as we know, one of our major banks told us a couple of months ago that their consumers or their clients base is showing that 4 days after payday, there's no money left in the bank. And the reality is they need something to make it through to the next payday, and they're having, unfortunately, to turn to credit in most cases to look for store cards, personal loans, etc., to make sure that they can still put food on the table. It's a very, very difficult situation right now.
So you're using a credit card at very high interest rates to buy food to survive?
Unfortunately, yes. I mean, it's that, or it's what we refer to as a payday loan, the one that you take just after payday and pay back at the next payday. It incurs interest, so you are potentially buying items and consuming them before you even repaying them. But realistically, there is no other way out for many consumers, a large majority of consumers, because there's no other way for them to put food on the table.
And we've looked at home loans. Some people can't even get that credit in the first place. They don't own homes. They're poor. Food is what they spend most of their salary on. How alarming is it that inflation, you mentioned 7%, that's already high, but food inflation, I think in the year until February, was 14%. That must be a disaster for so many South Africans.
It is, indeed. We've done some surveys just to get an idea of from normal South Africans, what is this doing to your budget? How has this affected, for example, your shopping habits? And we've seen some very disturbing feedback where people have, firstly, done the obvious things like change brands to try and find cheaper, do smarter shopping, specifically shopping for sales and the like. But right down to people who are now missing meals, who are having to turn to, they've, for example, have cut out meat and real, fresh produce, the ones with high nutrients and high value, to fillers, things that are significantly cheaper, but at least will make the tummy full at night. So it's having a devastating impact on South Africans in a multitude of ways.
For the people with a credit track record, do you know how many are missing payments, on the edge already? And as we predict another interest rate hike, albeit small, but I guess for many that'll be the straw that breaks the camel's back.
Indeed. I mean, we have roughly 22 million credit active consumers, And around about 38% of them have missed at least one payment by, on an arrears by 3 months, which means they are struggling to make sure that they're able to pay the debt that they have. So there's a combination of things that are potentially happening. Either people are missing out on debt payments because they're having to prioritize other more essential items in their budget, or they might be trying to still pay the debt, but they're having to incur further debt to put food on the table, or cutting down on their foods, etc. So it's a very, very difficult situation, and 38% is definitely something that's very alarming.
Sure. What is your advice to those currently having sleepless nights about debt?
I think first and foremost, the most important thing that you have to do is budget. It's unfortunately, like I always say, that one thing most of us hate doing every single month, but it's the only way that you get a true understanding of what your finances are, where your opportunities still are. Maybe there's some habits you can change, some shopping habits, takeouts, maybe anything to that effect that could still change. But realistically, most South Africans have already done that. The belts have been tightened months ago. And at this point, if you are an over-indebted consumer and you have debts, obviously, you can no longer pay your minimum monthly installments, is to seek help from a debt counselor. Debt counseling is there specifically to assist over-indebted consumers to renegotiate their monthly repayments with their credit providers, paying less over a longer period of time, and getting that legal protection so that they cannot take legal action against you and possibly even go as far as repossessing your home or whatever. But starting at the beginning, budget and planning.
And very quickly, before we let you go, are you worried about young people? I've been reading a lot about a global trend that is emerging of younger people taking on more credit than their parents.
Indeed, we're definitely seeing that, and as you say, it's not specific to us. It's a definite global thing. We know that a lot of people are now focusing on experience as opposed to, for example, assets. They're not necessarily even buying an asset, a house or a car. They're actually turning towards, buying that trip, that vacation. That's something I can look back on. But it's definitely we're seeing it across all age groups. There's no specific distinction, but we are seeing with the youth as well that the volumes, the number of debt is quite high.
All right, thank you very much. Debt Rescue's COO, Annaline van der Poel.